afternoon, good night. This is a broadcast about the BitMEX China A50 futures contract. As you would have known, if you've seen in our emails or tweets, we're doing a big push for our new and revolutionary futures contract using Bitcoin. And I wanted to take this opportunity to help explain some basic things about how this contract works so that traders can begin trading it. So first thing, what we're going to do is log into BitMEX and check out the China A50, or A50 for short, futures contract. Now here we see the standard trading dashboard. Right now we have one A50 contract that expires on the 26th of February, and the ticker is A50G16. So first off the bat, let's just go through the contract details so that everyone can understand exactly how this futures contract works. So as I said, it's the A50 G16. The A50 series we have is expiring each month. So on the second to last business day of a calendar month in China will be the expiry date for this futures contract. And it will expire at 3 p.m. Beijing time or 7 a.m. UTC. So as we see here, this is a Bitcoin futures contract, and it says settled in Bitcoin and quoted in CNY. Now, what does that mean? The underlying index is the FTSE China A50 index, which is an index that comprises the 50 largest companies in China by market cap. And this index is quoted in renminbi or CNY. Now, as the majority of people listening to this broadcast don't have renminbi, they can't trade onshore in China. So what we've done is we've created what we call a Quanto futures contract, which basically means we take a fixed multiplier in Bitcoin and apply it to the CNY price. And so what you see here is a contract size of 0.0001 Bitcoin per 1 CNY. So if you want to get the value of the futures contract, you take that Bitcoin multiplier multiplied by the current price. And as we see here, it's currently worth about 0.9 Bitcoin per contract. Now, when you're trading this contract, you're going to be inputting a CNY amount. And we have a minimum price increment, which is 2.5 CNY. Now, as I said before, this contract settles on our .50A index. If you click here, you'll see the index values. This is taking the official FTSE A50 close to 2 decimal places. Now the trading hours, this is a 24/7 futures contract, which is great because when China's closed, you can still trade the BitMEX China A50 futures contract. Now for mark price, how do we determine the value of this futures contract for margining purposes? What we do intra-month is we take the front month Singapore Exchange FTSE A50 futures contract, which is the most liquid derivative on this index. And we've purposely matched the settlement terms to match how the SGX expires, so that it's easy for market makers to bootstrap liquidity onto our contract. And what we see here is that it's a DPE enabled, which basically means our dynamic profit equalization margining method, and that's to help deal with the high leverage of this contract. The initial margin is 4%, which equates to 25 times leverage. And you will be liquidated if your equity drops to 1%, or effectively 100 times leverage. So let's go and take a look at the contract live and trading. So right here we see a standard order book. We have someone placing bids and offers on this price. So let's say that you are bullish China. You will be buying this futures contract. So let's buy one contract. So we see one contract. We see the buy cost as 0.04 Bitcoin. Basically, that's the 25x leverage. And there we go. And now we have executed one contract. Oh, we haven't executed. We're best bid. Let's cancel that order. Let's be a little bit more aggressive. Okay, now we've bought one contract. What we see here is our entry price in CNY, what we're currently marked to, which is the current price of the SGX futures contract, our liquidation price, and then the value. So as everyone has Bitcoin, we think in Bitcoin terms because that is what we'll be making or losing, and that is what we post as margin. So this gives us a Bitcoin notional of how much this contract is worth. And then we have our unrealized and realized P&L. So if you're familiar with trading our Bitcoin US dollar futures contracts, this is very similar structure. It's just that the underlying is now the FTSE A50 index. So when is this index most liquid? So if you want to look at a live ticking price or almost live, I suggest going to Google Finance. Doesn't seem that the chart wants to work right now, but they have a few second delayed price of the underlying index. So right now we see that based on the last trading prices of the 50 constituents, the index is worth about 9,100 CNY, and we see this value ticking. Now, on expiry day, the BitMEX futures contract will equal this price, or we call it the cash index. But as you'll notice, the current price is about 50 CNY lower, so it's trading at a discount. Why would this contract trade at a premium or discount? Basically, this represents the market's ability or inability to go long or short China offshore. So assuming that you wanted to arbitrage where our futures contract is trading and the actual value of the index on a cash basis, you would need to borrow Chinese A shares onshore in China, short sell them, and then buy our contract, and then wait for the values to converge. Now, short selling in China is practically impossible. And given the recent wobbles in the equity markets there, they've pretty much not allowed people to short sell, and even long selling is becoming an issue. So what have investors done? They have taken to offshore derivatives to express a negative view on China, which is why you see the SGX futures contract trading at a discount, and as a result, the BitMEX futures contract trading at a discount. Now, if you want to get some more information on the SGX futures contract, you can visit their website. They have a fact sheet where they'll tell you all the relevant details about the contract. They even have some delayed prices, and they give you your margin schedule. Now, this is more useful for those of you who might have a brokerage account that allows you to trade this futures contract, and then you might be able to market make or arbitrage the Bitcoin version of this futures contract versus the US dollar version of this futures contract. And I'll construct another webinar in more detail to go over how you would do those trades. Now let's take a look at our trade here. It looks like we're actually underwater. So let's close our position. So we want to sell one contract because we bought one contract. And so here we see our order history. We bought one and then we sold one. And now we can see our closed position, our A50 G16, and our negative realized P&L. Now, as you see here, everything is in Bitcoin. There is no need to ever touch renminbi. And that is the beauty of this contract, because as an investor who does not have access to the China onshore equity market, or even if you're Chinese and you don't have access to leverage trading, but you have access to Bitcoin, now you can go long or short China with up to 25x leverage 24/7. This is the only contract that's open weekdays and weekends, and trade one of the most exciting and volatile equity markets on the planet. Now that concludes this short webinar. I hope that everyone will digest this information and come on BitMEX and try it out with one contract. And you'll discover a new instrument to trade when the Bitcoin US dollar price action isn't volatile enough. Thank you, everyone.